Everyone. My name is Jodi Lyons. I'm the CEO of Senior Sherpa and your host today for Your Need to Know. I'm thrilled today to have two guests from the Private Access Network, Randy Domolky and Scott Schedler. Glad you guys are here.
Thanks for having us.
Thanks, Jodi.
And today we're going to be talking about private equity investing and what you need to know about it. So, first things first, what exactly is private equity investing? Scott, do you have an answer?
Sure. Yeah. Private equity investing is investing in securities that are not available in the public markets. So Randy and I both have a profound love for investing in businesses. Mm-hmm. So the analog in the public markets is the stock market.
Okay.
So you can, as an investor, you can invest in stock, shares of stock in the New York Stock Exchange or the NASDAQ or something like that. That's not what we're doing. We're investing in companies that are not public, but are private. So we're investing in private securities that are not available in the public markets.
Okay, so it's a private company that's not listed on the stock exchange or something like that.
Correct.
Okay. So now that we know what the basics is of private equity investing, I'd love to hear a little bit more about you. So Randy, tell us about yourself.
Sure, absolutely. Thanks very much, Jodi. It's a pleasure to be here today. So I worked for 12 years in the telecommunications industry first, which is rare. Not all private equity and venture capital investors actually have industry experience, but I do for 12 years, which is great because I know, the challenges companies face and what makes them successful and what makes them not so successful. After doing that, in about 2000, I started a venture capital fund of my own called Liquid Capital Group, and we invested over a 17-year period in different venture capital funds, different emerging technology companies, and we had a really good experience of finding, investing, supporting, and ultimately exiting, which is the point. I should explain that exiting is a monetization, a realization of your investment.
So exiting means you leave and you get money out of it.
Yeah,
okay.
Exiting.
I have to be really simple about that for me to understand.
It normally has a positive connotation. Most professional investors don't talk about exits that had a negative outcome.
Okay.
Because the goal is obviously to have a very positive outcome, which is to make money. Scott and I are trying to have a lot of fun doing this, but the ultimate value proposition for our investors is that we are offering them an alternative to the public equity markets and to our competitors in the private equity markets such that they can realize a substantial return on their capital. So I spent 12 years in telecom. I've now been doing this for 17 years, and the combination of the two gives me a really vast network of executives and other venture capitalists and other private equity investors that can be a source of deals for us to look at.
Okay.
And then once we make investments in deals, they can be a source to help us make sure that those companies are successful doing what they started out to do.
That makes sense. So you have interest from the inside and outside.
Yes.
Okay,
that's
great.
A great
and
way
Scott,
to
how about you?
So yes, in 2001, I joined a company called The Motley Fool, and I worked there for about 13 years. I was president of The Motley Fool and really enjoyed my time there. It's a great company, and I recommend it to people that are interested in the public stock market.
Okay,
it exists to help people make more money than they might otherwise trading and investing in public stocks. And that's a great thing. It's a great way to make money. But one of the things I learned while I was there is that's not where the most amount of money is made in the United States.
So where is most of the money?
75% of America's millionaires amass their wealth through private investing.
I had no idea.
Yeah. So in fact, I saw it firsthand. The Motley Fool is still a private company, and it transformed itself and grew, 10 or 12 fold over the time that I was there. And I was able to benefit from that. So I personally benefited from private investing. And I have some statistics I want to share with you, if that's okay.
I would love that.
Look at my notes. So
sure.
If you think about Tesla for a minute, most of you have, probably know the battery-driven car Tesla, which is a high-flying stock. So it IPO'd a few years ago.
IPO is?
Thank you. It's an initial public offering. So that's the transition that a company makes from private to public.
Okay.
So when you do your initial public offering, you become a public company. So Tesla did their IPO a few years ago, and if you had invested at the time of the IPO in the public markets, you would have made 19 times your money.
Wow.
Yeah, that's darn good, right?
That is
so that's
absolutely
good.
amazing.
But if you had invested when Tesla was a private company worth, say, $10 million, which is about the time that Randy and I get in, are you ready for this? You would have made 160 times your money at the time of the IPO.
That's
so yeah.
wonderful.
So the multiplying effect of getting in early on good companies is profound. Just I'll just throw a couple. I could go on all day with this, but, if you had done the same thing with LinkedIn, you would have gotten 6x if you invested at the time of the IPO, and held until today. If you had invested when the company was worth 10 million, you'd have gotten 425x, 425 times your money. And last, I'll do Google.
Yes.
23x if you invested at the time of the IPO in the public market, 2,300x. 2,300 times your money if you had invested when they were worth $10 million. So that's the type of investment that Randy and I are trying to do.
So you're looking at, first of all, I have to say I'm stunned at the difference.
The math is compelling.
They say, what is it, the early bird gets the worm?
Dead on.
Okay.
Yep.
So what you're doing now is giving people the opportunity to invest in things before they get public.
Well,
so
yeah.
Almost early stage startup and...
Correct. And an important point is a lot of companies, a lot of great companies don't even go public. They get acquired, so they never even become available to the public investor.
Oh.
So I would say that's the majority of the case, Randy.
Yes,
absolutely. Randy and I are finding ways to get into these companies at early stage before they get acquired or before they go public, and capturing the value that most public investors don't have access to.
And you've raised a good point. So most public investors don't have access to it.
Right.
But you guys started something called the Private Access Network, correct? So explain to me a little how that works. What exactly is the Private Access Network, and how does it help people get in early?
Let me, if I can, let me talk about three of the problems that the typical investor faces, particularly if they have an interest in when there's enormous wealth creation asset available. That's called private equity investing. Okay. So what they don't have is they don't have access to a network that gives them a steady deal flow of reasonable quality deals to evaluate. Okay. Secondly, they don't have the skills or the experience to separate the good deals from the ones that are likely not to be so good. Okay. And by the way, I don't want to make this sound like it's easy. 45% of these private deals end up failing, right? And so it's extremely important that you do the investigative work necessary to separate out the likely losers from the likely winners. And it's not easy. I mean, even analyzing public securities is not easy. Right. So public securities, they've got all this great organized data that you can look at and full disclosure and all that. That doesn't exist in the world of private investing. You got to be Columbo. You got to get in there and do the investigative work. Okay. And then the third problem that individual investors face in terms of the world of private investing is they typically cannot write the size of checks that the venture funds or that the companies themselves expect, which tend to be in the 100,000 or higher range. Okay. And Randy and I started PAN to solve those problems.
That sounds great. So if we could address for 1 minute, and I'll throw this to you, Randy. Okay. Sure. So we talk about private investors, and you just raised a very good point, Scott, about, not everybody can put in $100,000, or if they can, they may not want to put it into one deal. They may want to spread it a little bit. So can you explain to me, Randy, how does that work with PAN?
Sure, absolutely, I'd love to. So we set up a special purpose entity to make the investment in each one of the companies that we choose to invest in. And our members, after joining PAN, opt in on a deal-by-deal basis to the deals that they see a fit for with their own investment needs. They make the investment into a PAN-specific entity, and then we turn around and write a single check to the target companies. And it's really important, Jodi, that we're able to write that single check because the companies are looking at their investor roster and saying, we don't want 50 names on it, 100, 150 names on the list because we don't want to actually be responsible to talk to all those people because we're busy running the business. If I'm a technology executive.
Exactly.
PAN says, we're actually running the business of Private Access Network. Part of our job, other than finding the companies, is to communicate to our members as to what's going on with those companies. So there's a huge leverage effect that the portfolio companies love when they say, okay, so you were going to bring me 20, 30, 50 different individual investors, high net worth investors, but I'm only going to have to deal with one entity. That's really a fantastic part of what we're doing.
That's absolutely huge because it means you're communicating, if I understand this correctly, you're communicating with your members.
Yes.
And your communications would be about multiple companies, but the company only has to talk to you. Is that about right?
Absolutely. And so we have all this continuity with the company. We're talking to them every, month or couple of months, and we're able to put that in the context of every other conversation we've ever had with the company, including the due diligence period. And then we, package that in a way that is most appropriate for our members to understand, because you may not want the same level of detail, or you may be focused on other things. And so, we may have a 2-hour call with the CEO of a company, and we publish, what's the equivalent of a 10 or 15 minute update for our members, and they really appreciate that focus and the conciseness of what we're passing along.
Oh, absolutely. I mean, and I think that's the way a lot of people are getting most of their information these days, tailored to them, sent when it needs to go, not necessarily a monthly newsletter.
Yeah.
So they're getting what they need. I think that's terrific. If you could take about 1 minute, either one of you, I'll toss it to either of you.
Okay.
What exactly is an investor? Like when you're talking about these members, can you just describe real quickly who that human being is?
Absolutely. So an investor is typically somebody that has accumulated some amount of wealth, enough to invest, so they've got more than they need for their emergency fund, let's say.
Okay.
And in our case, it's typically an accredited investor. So I talked a little bit about the risk associated with private investing, and so if you just get into this willy-nilly and have to deal with the fact that 45% of your investments are going to fail, and you may choose the first 45 might all be bad, you can go broke pretty quickly. So the SEC has said that in order to get into private investing, you have to be an accredited investor, which means that you have to have either more than $200,000 in income, annual income, or more than $1 million in net worth excluding your home. So that's important. So, but there are a lot of those in this audience and in the United States that are still totally underserved by the world of private investing, and that's why Randy and I are here trying to bridge that gap.
I think that's terrific. And so we're going to leave for our break in just a moment, and then I'd like to tell you to look at privateaccessnetwork.com for some more information. And if you need some more information about me, you can go to www.senior-sherpa.com. And once again, to see more about Randy and Scott, please look at privateaccessnetwork.com.
There's more than just books at the library.
There's more than just books at the library.
Excuse me. There's more than just books at the library.
Il y a plus que de livres à la bibliothèque.
Hello. You have a lot of great books here today. You know there's more than just books at the library.
I know.
There's more than just books at the library.
back to your Need to Know. I'm Jodi Lyons, and I'm here again with Scott and Randy from Private Access Network, and you can find them at privateaccessnetwork.com. So we are talking about private equity investing, and you gave us a great overview before the break. So now I have the loaded question, and for whichever one of you wants to catch it, here's my pitch.
Randy's good at the loaded ones.
There we go, here's the loaded one. So how could I participate in private investing the way you've been talking about it?
Yeah, absolutely. So you have any individual investor, Jodi, has a number of choices. For the most part, they're not going to be through your current investment advisor or your Merrill Lynch type of company that you might have heard of. And so there's various levels of effort that you can put out. And I'll come back to PAN in a minute, but with PAN we aim to do almost all of the work for you. And that's one genre of how you can play in this industry. The other end of the spectrum, you have angel clubs around the country. There's maybe 300 of them in almost every city you could imagine. Some of them have multiple ones, where you can go on a weekly or a monthly basis to a meeting. You can help screen companies. You can help participate in the due diligence for those companies, which means, do we want to invest in this company? And you might even be able to sit on the board of that company and help them be successful. But that's almost a full-time job, right? So on the one end of the spectrum, you're doing almost all the work. And then on the other end of the spectrum, you are joining something like PAN, where Scott and I are taking our 50-plus combined years of business experience and essentially doing the work for you, and which we'll talk a little bit more about later, also putting our own money into the deal. So you go to a brokerage firm, an investment manager. They're doing all the work, but they're not putting their own money into the deals that they're marketing to you, essentially.
And if I'm correct, those deals also are probably only ones that are open to the public.
Right. Yeah.
So somebody who wants to be a little more adventurous or explore a little more can't do that through a standard broker, is that correct?
You could do it, but it would be difficult. The opportunities would be far and few between, and they would typically be larger. So we might be dealing with a company that's raising $5 or $10 million in capital for themselves so they can fuel their expansion. The large Wall Street type brokerage firms, that would not catch their interest. So they
just too small.
Yeah, it's just too small. So they would need to talk to a company that was maybe raising $100 million or $1 billion. Still might be private, but might, like an Uber, for example, they need $1 billion at a time to fuel their expansion. The huge Wall Street firms say that's great, and we'd be happy to market that to our clients. The challenge with that is, by the time a company needs $1 billion, as you could probably expect, they're fairly mature. So the opportunity that Scott's talking about to capture an outsized return has, in many cases, evaporated.
That train left the station already.
Yeah, train left the station, horse left the barn, whatever you want to call it.
Some of the toothpaste most of the toothpaste is out of the tube.
There you go. That's a good way to put that.
Yes.
Okay, so we were talking about how the PAN investors are accredited investors.
Yes.
And
100% of the time.
Okay, so they're kind of a different animal. They're wealthier, I guess, a little more sophisticated perhaps, although I probably shouldn't use that word. And so they could come in through your network and basically be part of a club, like you were just talking about the angel groups. The difference is that leading the club are two people with experience. Am I correct so far?
Yeah, that's one of the differences.
And then the second difference is that you're actually putting your money where your mouth is.
Yes.
So you're not telling anybody to invest in anything you're not already investing in.
Right. We are offering the opportunity to invest with Scott and I can tell you, for anyone out there who's not putting their own money into their own business, it is an extremely amazing process to have to put your own money into deals. It makes you so disciplined and so responsible that you don't need any, corporate code of values and things like that, because our money is in the businesses. So if we have a company that God forbid goes out of business, our business reputation suffers, our pocketbook suffers, our families get mad at us. I mean, it is not a good situation if that were ever to happen. So
your skin is in the game.
And I'll just pile on, Randy,
Yes.
and we do a detailed write-up on every deal. And one of the things I learned at the Motley Fool, and I know Randy's learned throughout his career, is when you actually have to put pen to paper on why you're doing something, particularly the investment rationale, it really creates an extra layer of discipline. And then when you publish that to your membership and to other accredited prospects that might want to look at it, they can come back and look at that later and hold you accountable for what you wrote with 20/20 hindsight. So when you put that lens on it, it puts a lot of pressure on us to do our best to get right, which is what we do.
That makes sense.
And I'll tell you, Jodi, it's actually a great process to go through for the entrepreneurs, too, that we work with, that they should write down exactly what their business proposition is, read it back to themselves, show it to their friends, and see if it holds water, because we actually say to some entrepreneurs, we love what you're doing, but I couldn't articulate this to our members. I couldn't write it down in such a fashion that people would easily take away from this that it's a great idea. And if I can't do that, you haven't sold me.
I am just
what do you want me
smiling
to do?
because I have heard this directly from you, Randy, which is tell me what you're doing so that I can tell somebody else what you're doing.
Yeah,
so I totally appreciate that. I've heard that from you before.
Yeah, as hard as Scott and I work finding and sorting through the deals, we don't want to work that hard to have to explain why it's so good.
Exactly.
That part should be relatively easy and obvious.
That makes a lot of sense. So I'd love to drill a little deeper, if it's okay with you guys, about Private Access Network itself, because I'm fascinated by this concept. So in my mind here, and trying to explain it to an audience, you've created your own entity, and people become members?
Correct.
So people who are accredited investors can become members of the Private Access Network?
Correct.
And then you guys present them with deals, and again, deals that you vetted and you're participating in. And then what do? So what's the next step if somebody, so of course, obviously somebody would go to privateaccessnetwork.com and find you, but once they've done that, how does that process work?
Well, it's actually fairly easy. I mean, they read the write-up. They may email or call us with questions. Okay. And if they do, we'll share the answers to the questions and the answers with the rest of the membership. Okay. They'll get clarity on whether they want to invest in a deal. They'll let us know. They'll tell us how much they want to invest. And this is important, Jodi.
Pardon me as I move my notes.
Absolutely. They can invest as little as $5,000 in any deal. So I'm not saying it's totally unheard of, but it's relatively unheard of that you can get into these high-quality private deals for as little as $5,000.
Oh, that's amazing.
So they commit in multiples of $5,000 how much they want to invest. We have a subscription agreement and an operating agreement that they sign. Okay. And then they begin their investment experience with that company, which includes a profound amount of communication from Randy and me. A la Shark Tank, frankly. So you actually get to see how your investments are doing, which is not always the case with venture funds. So you'll get communication about it, and then, as Randy was talking earlier, hopefully at some point, and there will be for some of our deals at some points, a happy exit where you get your money back plus a solid return.
And Jodi, I just want to clarify that Scott's being quite modest about the $5,000 minimum. When I was running a fund of funds business, we saw deals that had as much as $1 or $2 million minimum for individual deals. And I can tell you that we're in a certain venture capital fund that's one of the largest in the world, and they're in a deal with us where they put in $10 or $15 million to the company, and we put in, a couple $100,000 to the company, where our members invested as little as $5,000 and as much as $50,000. But to get into that fund, because we were in it in a former life as a limited partner or a member, their minimum is $10 million to get into the fund, right? So you have to have $10 million just to get into their fund, just to get into the same deal that Scott and I are in through PAN, for $5,000, $25,000, $55,000, whatever it is that you would want as an individual.
So PAN seems to offer investment opportunity that people wouldn't have otherwise.
That's our intention.
And it sounds also like they can have some fun, that there's different types of investments that you guys can make that other people can't make. It's a little more creative. Is there any company, and you can say no, I realize this is on TV, you can say no. Are there any companies that you could talk about now? We have about 2 minutes left. Anything you can say about a particular company?
Sure.
I love all our companies, right? They're all like children, as you can imagine. If you've done the write-up and the diligence to make sure that it's worth putting our money in, those are like our children. But I'll talk about Apex Labs. Apex Labs is using smart glasses to do for industrial workers what the smartphone did for knowledge workers. And it's compelling. And it's not just me, and it's not just Randy that's saying it's compelling. It's companies like GE, like Boeing, like Shell, Tesla, yes. So there are all kinds of industrial technology companies that are bought into Apex story, just like Randy and I are, and that's a fun one.
Terrific.
Yep.
And they're also local, so we like that too.
That's correct. Yep.
That's great. That's great. Anything else? Any other companies, or do we want to stop at that and switch gears now that we've said APX?
Well, I can talk a little bit about Street Shares, which
Okay.
is a local online lender that we've invested in, and they happen to be here locally, but they're working on a national basis, and they want to disrupt the banking industry. They want to give small businesses, in some cases veteran and other affinity-owned small businesses, the ability to borrow money in a much more fair and flexible way than you could from any of the other traditional financial institutions that are out there, and they're well on their way to making that happen. They've been in business for a couple years. They're originating, hundreds of loans a month to small businesses around the country.
Wow.
And you are getting approved and funded. You're getting approved in the matter of minutes, and you're getting funded, in hours or days. Whereas dealing with a bank would take days or weeks.
Right,
so
absolutely.
they're really disrupting their industry, and it's just a pleasure to work with the founders, who are very experienced in the banking industry, and the whole team of staff and other entrepreneurial-minded folks, guys and girls, who just want to, disrupt an entire industry.
That sounds fascinating. It sounds like you guys have some really, really interesting companies you're working with, and the process sounds like it's giving people a chance who would otherwise be shut out of these opportunities. So I think that's terrific.
Can I just pile on one thing, Jodi?
Sure.
That you're getting at the aspect that Randy and I are having a lot of fun, and we talked about two companies there that we actually chose to invest in. We look at hundreds of companies, and a lot of those are fun too. And so it's not just we're not just investing in all the fun companies. So we are choosing two from hundreds.
I love it.
Yeah.
Thank you. That is terrific. So thank you for watching Your Need to Know. Once again, I'm your host, Jodi Lyons, and you can see me at www.senior-